Hello everybody, Tortoise Investing here, coming at you today with some of the best REITs to buy now. If you're new, hit that subscribe button, drop a like, I greatly appreciate it, and comment down below, do you own any REITs in your personal portfolio? I would love to hear from yous. Now without further ado, let's jump into it. So with the S&P 500 suffering from a bad case of the ups, it seems like it's only been going one direction over the last year, up 27%, but not all sectors are enjoying this ride. And one of them that are kind of beat up still, and I think has opened up for some great buying opportunities. None of this financial advice, always do your own research for investing, but some real estate investment trusts I feel are priced pretty good. If you take a look here at the top, this is the Vanguard Real Estate Index ETF, still down 27.7% from its all-time high. And the thing to blame for this is interest rates. Higher for longer. That's something that they announced the last Fed meeting, and it scared the market a little bit when it comes to the real estate sector because they rely on debt. But once that turns around, I am a big believer that a lot of these REITs are going to benefit greatly. And some of these I own in my personal portfolio, being AMT and EXR. Now, without further ado, let's go ahead and take a look at these. American Tower Corporation, we got free cash flow yield of 3.23%, and we got a dividend yield of 3.58%. Take a look here at the revenue. Revenue's been growing at a rate of 12.29% over the last 10 years. Beautiful. Free cash flow growing at a rate of 7.62% over the last 10 years. Again, very nice. These carry, REITs do carry a lot of debt, but the thing that I love about AMT is they are working on getting their debt down. The debt to EBITDA ratio isn't as high as it used to be. At one point it was like 8 times, but now I think it's around 5, which isn't all that bad. And another thing that I love about AMT is their dividend. They've increased it every single quarter from 2012 up to here last year, 2022. They skipped a quarter. But it looks like it's right back off to the races, as since then they have increased it 3 more times the last 3 quarters. Now, that is some amazing growth over the last 10 years. That dividends increased at a rate of 19.35%. That is just bonkers to me, but I love it. So with real estate, with REITs, you don't look at the payout ratio. You look at the funds from operation, and the FFO, as you can see here, the funds from operation payout ratio, is at 65.93% trailing 12 months. So, not bad. If you don't know, REITs have to pay out 90% of their earnings to shareholders for the tax benefit purposes. And also, REITs are taxed as ordinary income, so that's another thing to keep in mind if you do invest in any of them. Next up, though, Extra Space Storage, just free cash flow yield of 4.74%. We get a dividend yield of 4.63%. And they recently did an acquisition of Life Storage. Now, Extra Space Storage is the largest storage by units in the United States. And they are projecting a lot of revenue growth going forward after the acquisition. Revenue has been increasing at a rate right at 14% over the last 10 years. Very nice. Free cash flow, 16.46% over the last 10 years. That is beautiful. Again, debt, just all REITs carry a lot of debt. Take a look at the dividend. Dividend's been increased at a rate of 15% over the last 10 years. So the reason this little doodad here looks so awkward is they sent out this dividend in 2 different payments. $1.01 and 61 cents, which comes out to $1.62, which is what it's been. So don't pay that any mind. I don't know what happened there, but Extra Space Storage. Take a look here at the FFO, the funds from operation trailing 12 months. Got 73.36% ratio. Again, not bad. Everything looks good here. Next up, Realty Income Corporation. This is a popular one amongst a lot of people, especially dividend investors. It pays monthly, and it's increased its dividend quarterly for like the past 27 years or something like that. They're known as the monthly paying dividend company. Um, they've got a big following. A lot of people love Realty Income, and honestly, at $52, I'm starting to love it too. Won't lie. Just free cash flow yield 7.59%. We got a dividend yield of 5.81%. Take a look at that revenue. Revenue's been increasing at a rate of 18% over the last 10 years. Free cash flow 19% over the last 10 years. And that dividend increasing at a rate of 3.82% over the last 10 years. Not the biggest increases, but long-term inflation beating, which is what you want from your holdings. You don't want something that's increasing their dividend like 0.5% or 1-2%. This is right at 4%, so not too bad. We'll take it. We'll take it. Now, Realty Income, funds from operation payout ratio, if you see here, trailing 12 months, 74.83%. Again, fine. Everything's falling in line here. Everything looks good financially. So I am holding American Tower Corp in Extra Space Storage right now, and I am eyeballing Realty Income really, really hard. They've been doing acquisitions left and right, which is one reason why their stock has plummeted like it has, because the share count's going up. And usually when the share count goes up, it's, a lot of shareholders don't like that. But I think once these interest rate cuts start happening, a lot of these REITs are going to benefit greatly from it, and I see the real estate sector over the next 2 to 3 years just blowing up. So I am loading up on some REITs right now. Like I said, I have 20% total, I believe, right around in between AMT and EXR. And looking to add any and all on red days. I'm holding quite a bit of cash right now in SGov. Kind of got spooked because S&P 500's over 5,000. This is the highest it's ever been. Things are going a little bit too well, and it's been going up a bit too much for too long. So I see a big turn down coming in the near future, but who am I to know? But yeah, stay tuned for more. I hope everyone is doing well, and take care.